Hey, good morning. Welcome to the Roundhouse Rundown. And we are just today Patrick Brenner from SPPI, which is Southwest Public Policy Institute. And we're going to talk a little bit today about predatory lending, or at least what Democrats call predatory lending. And we're going to have Patrick explain some of the research he's done on this particular topic. Just a couple of sessions ago, we passed a law saying that you can't have an interest rate higher than 36%, which sounds like a lot, but I think you'll understand as we go through this discussion why that law didn't really help who it was supposed to help. So, Patrick, thank you for joining us today.
Senator Brandt, thank you for having me. It's a pleasure to be here. And I think the timing is excellent. It's been about 15 months since New Mexico instituted the rate cap, or the rate cap went into effect. The law was passed during the 2022 session, with the rate cap going into effect in January of 2023. Now, as soon as that rate cap took effect, what that effectively did was compel short-term small dollar lenders to close their operations in New Mexico. It was no longer effective for them to continue lending to consumers in the state. Now, why is 36% the end-all be-all as far as rate caps go? Why does that number keep coming up? And I think that it goes back to the beginning of the 20th century. There was some study that had come out where 36% was identified as what was generally acceptable at all the fines and fees and the cost of doing business and the cost of lending operations. 36% was identified as the end-all be-all of allowable interest rates. So we're going back to the study that came out at the turn of last century to use as the limiting factor for lending operations. And it's antiquated, it's old-fashioned, and using APR, annual percentage rate, as a true cost of lending is no longer viable. I mean, you're talking about a loan that is lent out for less than 12 months. Generally, these loans are less than $1,000 and borrowed for anywhere between like 4 and 8 months. So less than a year.
Right.
What does APR stand for? Annual percentage rate.
One of the things that they really pushed is that's the cap that the military uses. So
sure, the military
military members aren't allowed to take out a loan, or no one's allowed to charge a military person an interest rate higher than 36%. So that was one of their arguments, is that, well, the government's determined that this is the right rate.
And that rate goes back to that study that came out at the beginning of the 20th century that says that 36% is the rate. And everybody on the left, the opposition to the short-term lending industry, like the Pew Charitable Trust, they always resort back to that 36%. But using an APR as a total as a cost of the loan is no longer accurate, because APR is really a cost, and it is a function of cost over time. It is a rate of that cost over time. It's not the total cost of the loan. Let me give you an example. If I borrowed $100 from you today, today's Tuesday, and I pay you back $107 on Monday, the following Monday.
Right.
Total of 7 days of money borrowed. That technically is a 365% interest rate, APR.
That's pretty good. Did you want that $100 now?
No.
Oh, okay.
No.
I was just going to see if I can make that kind of percent.
You don't want to see my credit right now. That's a 365% APR, but I'm only paying $7 in interest.
Right.
Go amortize my mortgage right now. Go amortize my mortgage right now, and you'll see that the total cost of the mortgage doubles the cost of the actual property.
Right.
So from our perspective at the Southwest Public Policy Institute, the Truth in Lending Act, compelling lenders to disclose total loan cost as a function of cost over time, is not a true truth in lending, not a true identification of the total cost of the loan.
But Patrick, when someone goes to they've called them different things. I can't remember what the industry calls, but the small dollar loan providers, the what payday lenders, I think we did away with title to go as far as like car titles.
Sure.
But when someone goes to one and they take out that loan, don't they actually aren't they required to still do a truth in lending
A disclosure,
statement that
yes.
lets them know if you pay it back in 4 months? So I'm going to take out a loan for $100 for 4 months. This is what it's actually going to cost me. Aren't they required to do that?
The lender is obligated to disclose those, yes, and they always do.
So you're not really hiding anything from the consumer, are you, in that case? Because you're telling them exactly what that's going to cost if you pay it on time. And then part of that is if you're late, here's the fees that it's going to cost you.
Sure.
So really, you're disclosing everything to the borrower before they even borrow the money, right?
Right. The lender is obligated to disclose all of those financial terms of the loan before the borrower actually signs on the dotted line. And they always do that. There are serious repercussions for lenders if they don't fulfill their disclosure obligations.
So what has happened to the customers that would typically have used those? Now I've actually never used one.
Sure. Neither have
I actually credit and have been with the same credit union for since 1987. I'm not going to name the credit union, but they're here in town. I've been with them since 1987, the same bank, and I enjoy using them. And if I need a loan, I really don't have a problem getting it from them.
Sure.
Because I've been.
You're a well-qualified borrower.
Right.
Yes.
So, but what happens to people who go in and they need, or they want to take out one of these loans? And a lot of time it is need, right? So tell me who we're talking about here.
Generally speaking, the average borrower is considered unbanked or underbanked. The average borrower of a short-term small dollar loan, they're referred to as traditional installment lenders by the industry. These borrowers are considered unbanked or underbanked, and that's an FDIC classification. They're categorized by the FDIC as being unbanked. And what that means is they don't have a relationship with a traditional financial institution like a bank or a credit union. And that plays in specifically on the credit union side because, as you know, the narrative from the opposition to the short-term lending industry was advocating for passage of the interest rate cap and telling this compelling narrative that credit unions and big banks were going to step up and offer an alternative financial product in lieu of the financial product that was originally being provided by the traditional installment lenders. So big banks and credit unions are going to step up and save the day.
So the customers are, people who either they don't have a bank account,
yep,
or
they're not a member of a credit union.
They're underbanked. They're usually their credit score is fairly low.
Sure.
And so what has happened to those customers? So I like you said, the testimony in the committee was that these credit unions really they didn't bring up small banks, but credit unions would step in and take over this. Now I will tell you, as someone who's been a part of a credit union, I thought that was pretty laughable, and I actually challenged that in committee because credit unions actually protect their money really well.
Sure.
And it's not easy to get a loan from a credit union until you've really established yourself. And you've got to have, I think, a 650 score before they'll look at you for any loan, even a signature loan. And then they don't traditionally like to do small loans. They will occasionally. But tell me what's happened. Did they step in and pick this up? And are they taking care of these people?
So great question. The Southwest Public Policy Institute published 2 awesome, groundbreaking, like shoe leather reports on this very subject. We tested whether the big banks were offering this type of loan, and then we also tested, I think it was over a dozen credit unions, locally and nationally, as to whether they were filling the gap that was the narrative being driven by the opposition to the industry. We found that one of those credit unions, of over a dozen credit unions, actually fulfilled the loan. Only one. And it took me about 3 weeks to dig through all of the different applications. I mean, these are people that don't have the luxury of 3 weeks to go search and find a credit union that's going to lend to them. Now, the only credit union that approved my loan, can I say, is that product placement?
Well, I
It's
mean,
in the
we're not,
report.
yeah,
So
but
there
I
was
mean, you could say it, it's fine.
is one credit union. It's in the report, No Loan for You Too. You can find it on our website, southwestpolicy.com. But this one credit union, I was already a member of this credit union, and I had had an auto loan with them for about a year by the time I had applied for this small dollar loan. And it was a simple application. It was $500, and I had the money in my checking account immediately. They approved the loan and immediately funded the loan. And then I turned around and paid it off right away. But one out of over a dozen credit unions in New Mexico and across the country that actually stepped up and filled the gap that was vacated, the vacuum of credit that was created as a result of not market failure, but government overregulation. So I don't know where these people are going. I do not know where these borrowers are going to fulfill their financial needs, because the credit unions aren't stepping up. The big banks, we tested the big banks. There was a Pew Charitable Trust report that came out that said, what was it, 6 of the 8 largest banks, measured by their number of branches, are now offering a full small dollar loan. And we tested the applications from those banks as well, and we found that narrative was not true. We could not get approval from any of those banks.
And that was you with a good credit score.
Well, I had a good credit score when I started.
Sure.
The problem was that applying
Every time you apply for a loan, it hits your credit.
The cool thing, though, about the big bank applications was that they only use intra-bank banking history. They, in lieu of a credit, like a hard credit pull on your credit score, they will actually look at your intra-bank history. However, I didn't have any bank history with the banks where we applied for the loan.
Gotcha.
Because I banked with like USAA and Navy Federal and Pentagon Federal. But those big banks, I had no credit history with them, no internal banking history with them. And that's the only criteria that they used to approve for their approval process. So I was declined. I actually didn't even get pre-approved, specifically on the Wells Fargo application. There's no option. So the Wells Fargo Flex loan is hardly flexible. But
well, most of them want you to have a bank account there. They want you to have that open. They want you to have that established for a while.
Some of them even require direct deposit history for over 12 months.
Yeah. I mean, because these are just signature loans. You're not securing them with anything like an auto loan.
There's no collateral.
Right. There's no collateral at all. There's nothing they can repossess. There's nothing they can take back. And so would you consider these pretty high risk loans?
Yes.
That are being taken, so the companies that are providing this service, they are providing the service to people who have lower than average credit scores. Usually, from what I've been told, below 500 is
deep
pretty common.
subprime is that classification.
Yeah, deep subprime, and they're going in and my understanding, what happens a lot of times is, they're living paycheck to paycheck already.
Right.
And some kind of big expense comes up, and it basically wipes out all their cash.
Right.
And so now they have no money to get food for the week for their family. And so they go in and they take out one of these loans to hopefully be able to pay it back over the next 4 to 6 months, to bridge that gap until their next paycheck comes in.
Sure.
Is that about right?
Well, generally,
it can be any kind of situation, but that's pretty general situation.
Right. A family incurs an expense that is outside of the norm, and in order to maintain the family cash flow, they opt to borrow money via the short-term lending mechanism. That is certainly a story that I've heard before.
I mean, I've heard, some people use them for other things. Someone was telling me they used one to buy an Xbox. Now, it's a really bad idea.
Yes.
Right? That's not a very good use of them. But again, it's about, people having the freedom to choose whether or not they want to take out one of these loans, isn't it? Because they're told exactly what they're getting.
Sure. And generally speaking, many of these borrowers understand the terms and conditions of the loan. They understand the product that they're buying, and they're willing and generally more than able to pay it back on time without any additional fees. Many of these customers are actually return customers, return borrowers that continue to go back to the lender that previously served them. Now, with the interest rate cap, so many of these short-term small dollar traditional installment lenders have closed up shop. These customers can't go back to their previous lender because the previous lender doesn't exist anymore. And there's a void. There's a very clear void. There was a significant decrease in the supply of credit as a result of this bad government regulation. And customers are being left to hang out to dry.
And I think one of my biggest problems with doing this has really been just taking away that choice, right? So,
Sure.
taking away the freedom of someone to, whether you agree that it's a good idea to take out one of these loans or not, really, you as government shouldn't make that decision for someone else. People need to make their own decisions. They need to learn from their decisions. If it's a decision that wasn't good, like, if someone used it to buy an Xbox and then turn around and had to pawn that Xbox, a couple of months later, maybe they learn from that and say, this isn't a great idea of how to use this type of credit. In my opinion, this type of credit should be used, for a situation where, you know, you don't have food.
The term that we tried to coin as a result of these two reports was it is a specialized emergency loan.
Mhm.
These are loans that are generally intended for a very specific purpose, an emergency expense where you need access to cash within the immediate future. Now, many of these borrowers don't have 3 weeks to spend trying to find a credit union that will approve them, and they won't find a credit union that will approve them in that time frame if they're not already a credit union member with the existing financial products and that financial history within that credit union. They don't have that luxury of time.
So the studies that you did, and I totally agree, they just don't have that. Again, it's an emergency. They're doing this for something that they need the money usually within 24 hours.
Right.
There's no food left at home. They've gone to all the food banks they can go to. They've got the help that they can get, and now they're really, between a rock and a hard place.
They're out of options.
They're out of options. They're trying to feed their children. How do they do that? So I know it wasn't a part of your research because it's really hard to do that kind of research, but where do you think they're going? Are they going to loan sharks? I mean, do we still have loan sharks in America?
Unlicensed lenders.
Loan sharks?
Yes.
The people that break arms and legs.
Right. We don't know where they're going. We just know where they can't go anymore. It's not like we've seen additional volume from credit unions and big banks in terms of offering this flex loan or short-term small dollar installment loan. They're not going to the big banks. We know that because these big banks are only offering these loans on paper as lip service to the progressive left, like the Pew Charitable Trusts. Now, Pew, there was a fella over at the Pew Charitable Trust. His name was Alex Horowitz. They actually shelved the whole project as a result of our research. This is like $1 billion think tank that is headquartered out of the Northeast. They actually, Alex told Americans that were borrowers of traditional installment loans. He told these people that you should just borrow money from a friend. Like that was the actual advice, the tone deaf advice that was coming out of the progressive left. It's just go borrow money from a friend.
And obviously, assuming that you have friends that would loan you money, assuming that you have friends that have extra money to loan,
right?
That's a lot of assumptions. Friends or family, and you're in a situation where you've got children that need to be fed, diapers that need to be bought, all those things. Can't remember what it was like to have little children. Baby formula, the price of everything skyrocketed. We've had so much inflation since this bill went into effect that, people just trying to deal with that change and the increased cost of food and the increased cost of gas. I'm sure that there are a lot of people struggling, and they have to get this money somewhere. And we know there are unscrupulous people out there.
Sure.
I almost could guarantee can't, because there's no way to research it, right?
There's no way to document it.
You
It's
can't
undocumented.
research you can't research when someone's doing something illegally, right?
Right.
I mean, I guess maybe but they're not. No one's going to admit that. Yes, I'm a loan shark, and I'm, if someone doesn't pay me back, I go and break their leg. No one's going to admit that.
Right. Well, I mean, maybe that is something that we could try, is get a Southwest Public Policy Institute to test whether loan sharks would actually lend me money with my current financial predicament, and as part of continued research for SPPI. We'll see. We'll see.
So, I think that's one of the things that's concerning to me, is where are these loans coming from? We know that in New Mexico, we actually have a pretty large presence of cartels.
Yes.
They've stepped in. We just saw that. Actually, I just saw that on the news the other night. Again, all of our gangs and how they're connected to the cartels. Actually, the FBI director, Ray, was actually testifying to Congress yesterday, and he was talking about that. And with the open borders, how much more the cartels have come in, and they're controlling things and controlling the drug trade. My guess is they're also controlling this. They're the ones that people are having to go to, because they have nowhere else to go. And you're not going to let your children starve. You're just not. You're
Right.
going to risk whatever you have to risk to work with whoever you have to work with to make sure that your children get fed.
Sure.
I mean, you're a dad, you know that. You wouldn't let your children go hungry.
No, I would always make sure that my children are fed. Absolutely.
And I think that's what most of these people are doing. And it really concerns me that we've, through, in my opinion, basically, it's that old saying, we're from the government and we're here to help.
Right.
What is that? The scariest,
The
scariest seven
scary-
words, or
yes.
something like, that Reagan said, it's the scariest 7 words in the English dictionary. We're from the government and we're here to help. I think that's really what we did here is, hey, we're from the government. We think people are taking advantage of you and you're too dumb to know it. So we're going to help you because you can't help yourself. That's exactly what I believe the progressives did.
Well, and here's the other concerning thing with Patricia Roybal Caballero's proposal for a public bank is the government has artificially created a credit crunch. They've reduced the supply of credit in the state of New Mexico by instituting this rate cap, and that will force these consumers into desperate situations. And then you've got this proposal for a public bank. The progressives want ordinary New Mexicans as reliant on the government as possible. And if there is no access to their traditional installment lender, and the only other option is the public bank, they're going to choose the public bank because there is no other choice. So you are forcing all of these people that were being satisfied by the private sector into a situation where they're more dependent on the government. And as we know, there is no thing more permanent than a temporary government program. If they get that public bank passed, it will never go away, and you'll get more New Mexicans dependent on that. And if you look at New Mexico's public schools, you'll understand that we do not want the government delivering a public bank to private New Mexicans, because the quality of the product won't be there, as it is with the public school system.
Yeah, I think you just don't want government, that involved in your daily financial life. I mean, it's bad. It's bad. Well, they are now, right? I mean, again, a lot of the reports coming out, about, how the government's already been spying on us through the banking institutions. So you're already seeing that. It's why a lot of people are going to things like cryptocurrencies, because they don't want the government knowing what they're doing, even if it's completely above board and completely legal. The government's supposed to get a warrant before they can see what you're doing. That is the Constitution. And it just floors me how many times the progressives just want to ignore the Constitution and violate our constitutional rights.
Sure.
And so, I think they've done this with this, where they've made it impossible for people who are struggling, the very people they claim that they help, the very people they claim that, I mean, what happened to all of these NGOs non-governmental organizations, if you don't know what that means. What happened to all these NGOs that were there testifying? Oh, we'll pick up the slack and we'll take care of these people. Did they all disappear after the bill was passed?
It's not their job to fill the needs of these credit needy individuals. I mean, their job was to advocate for passage of the bill that they wanted to see passed because their bottom line was being padded by a donor that wanted to see the bill pass.
So you're basically saying they're just liars. They were lying to us up there when they said they would step in and fill the gap, that they would take care of these folks.
I'm glad you said it so I didn't have to.
So
but yes,
I mean, they just lied. They lied to the legislature, and this is what I see so many times: is that you have these groups, they'll come up and say, "Oh yeah, we'll take care of these people, and we'll make sure they get," you know. I don't remember the name of the bank, but there was one bank in particular there and said, "No, we're gonna step in and take care of these loans," and they're not there. And so these folks who are struggling, who again, doesn't matter how you feel about the interest rate. And I know a lot of you are sitting out there saying, I would never pay more than 36%. Neither would I, but I'm not in that situation. Now, if everything went to hell in a handbasket for me and I lost all of my income and I needed to feed my wife and children, I'm going to take out a loan for whatever interest rate I have to, under whatever conditions I have to take care of my family.
sure, but you have to go to Texas to do that, or go to the cartels.
Go to the cartels. What about online? Can you do that online?
We have not attempted to simulate online lending at this point.
And my guess is, because I've not borrowed online either, right? My guess is that they probably have a pretty high credit threshold that you have to have.
And there are some online lenders that are in the traditional installment space that will lend to subprime and deep subprime borrowers, but I'm not as familiar with the credit approval criteria there as I am with the credit approval criteria from the credit unions and banks.
And you're talking about people that either don't trust banks, so they don't have a bank account,
right? And
or their credit scores already so low they can't get a bank account, because banks actually check your credit score to even open a bank account now.
Sure. Well, based on non-sufficient fund fees and overdraft fees, I really don't blame them for not trusting banks. I mean, if you want to talk about financial products transparency,
right.
With a loan, I know what I'm getting into. Here's all the fees. Here's what happens if I'm late. It's all disclosed to me when I'm signing on the dotted line. When you open a checking account, and I mean, these people are already financially stressed. They're not anticipating unanticipated expenses. Let's say they overdraft their checking account. They get hit with a $36, $50 overdraft fee. That's not something that they agreed to as a line item. That was a surprise. That was an incurred expense that they weren't anticipating. I mean, you talk about the APR on a $50 non-sufficient fund fee or overdraft fee. I mean, what's the APR on that? Though that's the real predation.
I mean, a lot of times that overdraft fee is for less than what the fee is.
Right. Less than the expense.
They go in and they buy something at Walmart for $20, and they they overestimated what was in their account, although it's pretty easy now to check it with the apps that banks have. But we used to call it bad check day in the military, when you would go the day before your paycheck's going in on the 15th and the 1st.
Yeah.
But you need food. So on the 14th, you go in and you write that check, because it's going to take 2 or 3 days for it to get in.
Right.
So we called it bad check day. That's just the way it was, right? You don't really have that anymore because it's all instant. I mean, but yeah, you go in and you think you have $25 in there. You're in a hurry. You don't check it. You buy 20 and you only had 19, and now you're hit with a $35 insufficient fund.
Right. What's the APR on that? I mean, sometimes the APR on these non-sufficient fund fees and overdraft fees can exceed 10,000%.
Yeah. So I've heard about Southwest Public Policy Institute since you're here, and we haven't had you here before. Give us a little bit of a rundown on what you guys do, what your purpose is, and what your position is with the organization.
Sure. I'm the president of the Southwest Public Policy Institute. We launched the institute in the summer of 2022 in the aftermath of all the COVID lockdowns and government overregulation, and we sought to provide to New Mexico and the entire American Southwest a number of different services, and those generally get distilled into two buckets. One is the consumer emulation studies, by which we tell the stories of everyday ordinary Americans and how government regulation, or in this case overregulation, is impacting their practical day-to-day lives. And then two is exercising our rights as American citizens in holding the government accountable, and that's where all of our litigation work comes in. We've lodged litigation against a number of entities here in New Mexico, and then we've also launched a litigation efforts in the state of Arizona, and we're anticipating more in the coming months.
And so on the litigation issues, you're really dealing with government institutes that are not complying with the Freedom of Information Act, right?
Right.
So as you're doing your research, you're requesting certain information from government entities, so you can look at whether they're doing a good job, whether they're doing what they're supposed to do, whether they're wasting money, whether they're following the policies that were actually passed by the legislature. And when they won't give you that information, really the only avenue that you can take to force it is to take them to court. Is that right?
Right. The only way to compel compliance with the Inspection of Public Records Act, which is New Mexico's version of the Freedom of Information Act, is the state level analog for that. The only way to compel compliance with a governmental entity, a government body like the city of Albuquerque or the New Mexico Secretary of State's office, is to bring litigation or litigative action. And that action, through the courts, a judge can compel compliance to that entity, and then they also are assessed fees for damages for the delay associated with those validly submitted public records requests.
Great. Thank you for joining us again with the Roundhouse Rundown. We appreciate you being our guest. Want to just put out there a little bit, how can you get involved? How can you follow up? It's real simple. We had some people on our last podcast that actually wanted, how do we get involved in campaigns? One of the ways we either reverse this or keep other bad policies from being passed by the legislature is to get more conservative or moderate legislators up there. So how do you do that? You've got to get involved in these campaigns. So you can email me at senate40@gmail.com. So Senate40, spell out 40, FORTY, @gmail.com, and I can link you with someone that's running in your area, or I can get you involved in the races that I'm a part of, which is several of them. In fact, I ended up, it looks like I'm going to have an opponent myself. And
if
so
she files her paperwork right.
Well, yeah, there's they're actually walking her through it.
Oh.
So apparently she's not smart enough to know how to actually fill out the right paperwork, so they're walking her through it at the county clerk's office.
No
So I'm
comment.
not too worried about that, but if you want to get involved, email me at senate40, FORTY, @gmail.com, and I'll send you back information of how you can get involved and help us to win more seats in the Senate, so we can stop this kind of legislation and maybe even push back some of these to change this legislation. Hope you'll join us again next week, next Tuesday, as we continue our discussions on what's happening in New Mexico and how you can help and how we can start changing the state to make it work for all the citizens of New Mexico. Thank you very much, and I'll see you next week. Bye-bye.